Good afternoon, everyone. I would like to welcome everybody to this agency banking certification class for the certified level. I know we've all tried from the foundation to the intermediate to the certified level, and I would like to say congratulations to everyone. So today we'll be doing the first class for the certified level, which is ethics, corporate governance, and professionalism. And our first off today is Dr. Olufemi Masaku Johnson. So I would like to read his profile because he's a really big man, has achieved a lot. So Dr. Olufemi Masaku Johnson is a national administrator and instigator of Association of Corporate Governance Professionals of Nigeria. He is the consulting state counseling psychologist of Lagos State. He's a graduate of public administration and has masters in personnel psychology, EXU, PhD, organization leadership. He is a chartered secretary and administrator, a chartered management practitioner, a chartered personnel management practitioner, and chartered economist. He is also a certified business sustainability practitioner and is also a member of Nigerian Institute of Management, NIM, also a chartered Institute of Personnel Management, CIPM, also a fellow of the Nigerian Institute of Training and Development, NITAD. He is a fellow of the Association of Corporate Governance Professionals of Nigeria and also fellow of the Chartered Institute of Economics of Nigeria. He is a Is anyone speaking, please? He is a
No,
recognized
no, no.
leader.
I was just appreciating the titles.
Oh, I said a big man, the long list. So let me just
They are good.
finish it off, sir. He is a recognized leader in corporate governance in Nigeria and implementation of project governance and strategy for organizations with over 30 years of specialized experience in insurance governance, project management, consulting professional services, culminating in successful tenure for 10 years in Law Union and Rock Insurance PLC, 8 years in Lagos State Public Service Staff Development Center, 5 years at the Institute of Management, NIM. He sequentially moved to the Institute of Directors, IOD, Nigeria, where he pioneered and led the Directors Development Department with triple A-rated director learning in Nigeria and in the United Kingdom. He is a member of the Board of Trustees and Secretary to the International Aeronautics College, Chairman of the Board of Labour Foods, President Chairman of Council, Global Institute of Project Management, Secretary to the Board, Medical Ethics and Governance Initiative, Board Member, Foundation of Value Transformation, Committee Member, Lagos State Post-Service Welfare Council. Also a technical consultant to Lagos Chamber of Commerce and Industry, as well as examiner at the Chartered Institute of Bankers and Institute of Chartered Secretariats and Administrators. He is IFC certified Corporate Governance Board Leadership Training, South Africa, and CMD accredited trainer. He is an alumnus of the Lagos Business School, LBS, School of Media Communication, HIIT, CMD, IFC, NCEMA, Harvard Associate, FITC, NEPA South Africa, NCGN South Africa, and is now focused on board evaluation, project governance, and business performance using lean methodologies, also using project governance tools to establish the strategic alignment between all processes from all business units at all levels. He is a published author and happily married with children from the principal ruling house of Aguda Ogba, Lagos. So I would like us to welcome Dr. Olufemi Masaku Johnson. On to you, sir.
Good afternoon, ladies and gentlemen. I'm pleased to be with you this afternoon to consider the case before us, Agency Banking Certification Review of our study pack. Let me start by saying that agency banking is very, very key to the staple economy of any country. Let me try to define it. Agency banking is a banking model involving a business, bank, or financial institution delivering permitted financial services. We need to underline that permitted financial services outside the traditional places of business through third-party agents to last mile end users. The last mile here refers to why these businesses, banks, and financial institutions would not traditionally reach. So the last mile can reach them. People who live in these last mile areas, rural, semi-urban, often need access to financial services because traditional banks need more reach to serve them. It is important to note that agency banking also serves people in urban areas. So another thing to note about agency banking is that these agents only deliver restricted financial services. This restriction is because last mile banking often happens without proper KYC. So that is why a great care has to be taken in carrying out this assignment. So let's try to review our pack and see what we have in our pack, right? Okay. So we are reviewing ethics, corporate governance, and professionalism. So these are the content that we are going to be working on. Chapter 1, Introduction to Agency Banking Ethics and Professionalism. Chapter 2, Ethics and Professionalism. Chapter 3, Key Roles and Responsibilities of Agents and the Financial Institutions. Every of the parties has a very, very key role to play in this regard. Then Chapter 4, Regulatory Framework for Agency Banking. Chapter 5, Management of Risk in Financial Inclusion and Agency Banking. So we now look at the test question and answer, and we do the overview. And if there's any questions, so we look into it as we go on. So let's look at Chapter 1. What we are doing is review. Introduction to Agency Banking, Ethics and Professionalism. What are we bringing out of this? That's our learning objective. The learning objective is to introduce agency banking as an innovative and cost-effective strategy that promotes financial inclusion and optimizes banking operations. When we say optimizing, we are saying that to reach places that either to normal banking services will not be able to reach. To that extent, we optimize in order for us to reach the last mile, as we said. So agency banking is an innovative way, and this is what is done in many salient parts of the world now. These days, it's a different story. Instead of splashing each cash on the cost of setting up brick and mortar branches, setting up branches enlarging scopes, enlarging branches all over the place, we can use these innovative means to reach our customers. So a 2020 report from the IMF revealed that commercial banks in Nigeria shut down more than 200 branches and more than 600 automated machines in that year. And this data suggests that banks are making more use of agents. So this is very, very important. And I think agency banking, from what we come to see, came into being in our country in 2013. That was when we started this innovation, and we are bringing it to bear in every aspect and ramifications of service, bringing about financial inclusion. So at the end of the chapter 1, the learning outcome is, one, to understand the concept of agency banking, the structure, the objective, the importance to financial services sector, to understand the concept of ethics and professionalism. This is very, very important. We are concerned about ethics. We are so much concerned about it as corporate governance practitioners. Ethics is the most important factor in any financial transaction. I must say also that Nigeria has no two problems. Our country has no two problems. We have only one. In terms of resources, our research, United Nations research on resources of nations. We were 3 months in this research, and the final report was read by a professor in Bradford University, United Kingdom. To our chagrin and to our consternation, Nigeria has the highest resources in the whole world. We are followed only by a country called Congo Democratic Republic. America does not have 4% of our resources. We don't have any problem except one, and that problem is ethics. When you see insurgency, when you see chaos anywhere, when you see maladministration and so on, it's a violation of that one problem. And that problem, the only problem we have as a nation, is the problem of ethics. And there is a need to take care of that. And when it comes to financial environment, ethics is the most pivotal principle that everybody must work with. Number 3, understand the outline ethical standards in agency banking. Get to know how ethics and professionalism impacts in agency banking. Then understand the guidelines, regulatory standards set by the CBN to maintain ethics and professionalism. So this is very, very important. CBN as a regulatory body for agency banking in our country, it's very, very important for us to understand the guidelines, to know the reason why they have to impose some restrictions and so on. So let's try to introduce ourselves to agency banking. Here we say is the provision of financial services to customers by third parties, by agents, on behalf of a licensed deposit-taking financial institution and or mobile money operator. That's the principle. In another way, agency banking is a strategy in the financial industry that uses authorized agents, authorized, not unauthorized, authorized agents to deliver financial services to customers in remote areas. That's why we call it last mile users and beyond the reach of the traditional bank branches. So it enables banks and other financial institutions to extend their services to locations where they may not have physical presence. And we have said it that to have physical presence everywhere might not be too budget friendly, might not be feasible. So agent banking initiative in Nigeria has therefore proved to be a viable tool for achievement of financial inclusion within this confine of the country. So financial inclusion is very, very key for the development of the country. So yes, I think I did say that this started in 2013 when the Central Bank of Nigeria formally regulated agency banking, issuing the guidelines and agent banking relationships in Nigeria. So this is very, very key to note. And also, we have some benchmark, like countries like Colombia, Brazil, Peru, India, Kenya, actually inspired Nigeria to adopt agency banking model. And this is very, very key. So this is how we actually put all this together. So let's look at our the figure one talks about the evolution of agency banking in Nigeria. In 2009, we have mobile money operation guidelines issued. Then in 2011, mobile money licenses were first issued in Nigeria. The same 2011, money market operators also started to deploy agents. And in 2013, agents or agency banking guidelines were issued. And 2015, we have also super agent guidelines who also work with agents across the place to ensure that there is financial inclusion everywhere. So agency banking also referred to as branchless banking. It provides a cost-effective channels for banks to acquire customers, facilitate transactions outside a bank branch. Its aim is to address the challenges of cost and distance that is associated with traditional banking services, to take away the cost, to take away the distance, and to make the people that are in need of these services to get in touch with those that will provide the services. So for customers, agents are sometimes referred to as human ATMs, as they facilitate transaction within closer proximity to the ATMs, thereby democratizing financial inclusion, which impact positively on several parameters of the Sustainable Development Goal. And these are the Sustainable Development Goal. This inclusion mechanism actually assists to achieve some of these SDGs, one of which is poverty, eradication of hunger, assurance of health and well-being, provision of quality education, issue that relates to gender equality. This is a third order. Gender equality is a third order in our case. Up to this morning, it's only 4.1% of female that are in the Senate and House of Rep put together, starting from there. So we still have a long way to go in that particular order. But in terms of inclusion, we want to get as many female as possible to put them in the net of inclusion. Then 6 talks about decent work and economic growth. 8, industrial development. 9, innovation, which is very, very key now. Innovation is very, very key. And infrastructure. Then reduction of inequalities. So these are the main targets of SDG, and also it goes a long way in eradicating some of this disparity within the setup of the community. And of course, it ensures inclusion, putting agency banking model into it. So this is the image of SDG, as we all know. Then the history of evolution of agency banking, I want us to take particular note of this history, because this can be, we can be asked to actually relate to some of this as we are going on. So agency banking was introduced for the first time in 2013 in Bangladesh, with the aim of providing banking services to economically backward and undeserved population, especially those who live in rural locations and far from banks. Research by the World Bank shows that, according to Global Fintech Report 2021, that was released in 2022, the global population of approximately 1.4 billion people are still unbanked. Up to 2022, 1.4 billion out of 8.1 billion human beings on earth have not yet been banked. So this 1.4 billion is not at all a smaller number. It's not a smaller number. And as history says, agency banking primary aim is to help the unbanked, the undeserved population. That is the reason why the adoption of agency banking was considered by banks, not only for the purpose of those customers to get services, to get bank services, but also to actually make the banks to be solvent, to make the bank also to gain some impetus of financial actually be scrutinized. So going for ethics regarding relocation, transfer, and closure of agent premises. According to CBN guidelines for agency banking and agent banking relationship, it is the responsibility of the financial institution to ensure that no agent shall relocate, transfer, or close its agent's banking premises without prior notice to the financial institution. Let's take particular note of this. Notice of intention to relocate, transfer, or close agent banking premises shall be served at least 30 days before that actually takes place. Within 30 days prior to relocation or closure of agent banking premises, the financial institution shall notify the CBN and forward the details and relocation, transfer, or closure of that particular business. Then settlement of transaction and technology requirements. So to ensure real-time transaction, financial institution will ensure that all transactions carried out within the agent banking are done in real-time basis. Deploy technology that facilitates instant payments, provide its agent with set position of transaction. Small IT requirement, very, very important. Minimum understanding of the knowledge of information technology is very, very, very important. And also data and network security requirements. Financial institutions shall put in place systems that specifically and at a minimum address the following: physical and logical security of the infrastructure, physical, logical security, then availability of services in that particular environment, data confidentiality and integrity, encryption of PIN number and electronic transaction. Then error messaging and handling. So all these has to be taken into cognizance. Then third-party service provider with the following: written contract with the third-party service provider for the following technology platform, agent selection, agent network management, agent training. Because if you don't train them, don't blame them. And for super agents, may I say that if you don't train them, they will drain you. So it is very, very critical to introduce training at every point. Then equipment provision is very, very important. Then equipment maintenance. So all these are very, very important. So let's move to the guidelines for enrolling financial institutions and agents. Application and approval requirements. Any CBN licensed financial institution who wishes to engage in agent banking shall apply to the CBN for approval. The application shall clearly state the extent of agent banking activities, responsibility, other relevant parties under the agent banking relationship. The application shall be submitted to the director of the appropriate regulatory department of the CBN. Applicant shall supply the following information: name of the applicant, postal and email addresses, business address, telephone number, company registration number, and certificate of the Corporate Affairs Commission. And also documentary requirements for financial institutions include board approval. We actually encourage every small scale business to try as much as possible, as soon as they are getting to meet scale, they should have a board. It is very, very important for organizations to begin to see the need for a board now. But because of the nature of our own, our build up as a nation, our value system that is so self-centered, we find it difficult to do the right thing. So number two, a document that shall outline the strategy of the financial institution, including current and potential engagements, geographical spread, and other information. Then qualifying criteria for engaging agents, showing outreach, competence, and integrity must be submitted. Then service level agreements, SLAs, and agent banking contract between and very important. The risk management issue. Know your customer. Then they fund this has to do with issues that relate to money laundering fund, and some other measures of protection against fraud must put in place. Internal control mechanism, operational procedure, and any other policy and procedure relevant to the management of agency banking arrangements, especially issues that relates to money laundering, and some of those issues has to be taken care of. Brief description of the agency banking relationship, risk management processes instituted for the agent banking activities, technical requirements for carrying out services under the agent banking relationship, feasibility study for the development of the agent business for a minimum period of 5 years. If the agent cannot draw it out, this should be given to a professional to bring a standardized feasibility study that the agent or its entity will get used to and will take ownership of. Then other documents as may be required. So also there is also guidelines for eligibility for agents. The first guideline is that the agent must have been in legitimate commercial activity for at least 12 months preceding the date of the application. The entity shall not be eligible for appointment as an agent if the carrying out of agent banking business by the entity shall contravene any written law, regulation, or objects of entity. Then the following shall be eligible for appointments: a limited liability companies, sole proprietorship, partnership, cooperative societies, public entities, educational institutions, trust, and any other entity. And this is actually expanding the scope of entity that can be involved in agency business. When you have cooperative societies now, you have educational institution now, the scope is now being enlarged. So in any entity which is faith-based, not-for-profit or non-governmental organization, an educational institution, bureau de change, any other entity which under any applicable law is not allowed to carry on profit shall not engage in banking as an agent. So this is very, very clear. This is very, very very clear for everyone. Faith-based, not-for-profit, NGOs, civil society, bureau de change, and all these institutions carrying out not-for-profit business may not be allowed to engage in this. So the law is not is actually in tune with those agencies that are basically set out for the purpose of non-profit. And finally, any entity which is subject to any regulatory authority under any written law or is a public entity shall obtain the consent of the regulatory authority or the appropriate oversight body or authority prior to being appointed an agent. You can have an department or piece of government that wants to engage in agency business. they must obtain a written. In summary, Chapter 2 reviews ethics and professionalism within the context of the financial sector. Professionals, the consistent and high standard moral ethics, skill, competence, and judgment in executing assigned roles and responsibilities. It governs an individual behavior. It encompasses accountability, treatment, mutual respect. Very, very key. We have actually alluded to all this. So the next is Chapter 3, key roles and responsibilities and financial institutions. Key roles. The learning objectives here is, by the end of this chapter, the reader should be able to understand the key responsibility of agents and financial institutions, understand the relation between agents and financial institutions based on regulatory standards, know the regulatory requirement for agents and financial institutions, understand the documentation and approval requirement for a POS agent. We have alluded to some of this, but we mentioned the ones that are very, very key and critical there. So key responsibilities of the bank agent: opening account, balance inquiry, deposit withdrawal. We have talked about this: issuance of mini statement, fund transfer, local bill payment, technology and equipment maintenance, customer loan application, and so on. So we have actually dealt with all those. So prohibited activities for agents. Let us take particular note of this. Prohibited activities for agents. 1, agent shall not operate or carry out any transactions when there is communication failure within the financial institution. If there is network problem or whatever. Number 2, shall not carry out a transaction where receipts or acknowledgement cannot be generated. Number 3, charge the customer any fee. Shall not give any guarantee. Shall not offer banking services on its own accord. Shall not continue with the agency banking business when it has a proven criminal record involving fraud, dishonesty, violation of integrity, or any other financial impropriety. Number 7, provide rare or old is to be providing or rendering any banking service which is not specifically permitted in the contract. Shall not open accounts, grant loans, or carry out any appraisal function for purposes of opening an account or granting of a loan or any other facility except as may be permitted by any other written laws to which the agent is subject. Will not transact in foreign currency. Will not provide cash advances. And will not be run or managed by FI's employee or associate. This is what we should underline. We have to underline this. Financial institution staff or its associates will not be permitted to run agency business, subcontract another entity, or carry out agent banking on its behalf, except where there's a super agent structure in place. Will or may not in that document specify other activities which the agent is prohibited from undertaking. So let's see the responsibilities of super agents. The super agent shall be responsible for monitoring, supervising the activities of the agents, have information on the volume and values of transactions carried out in each of the service by each agent, monitor effective compliance, will set limits and establish other prudential measures in each case. Take all other measures, including on-site visits, ensure that agents operate strictly within the boundary of the law, guidelines, and the contract. Notwithstanding the responsibility of the super agent to monitor and supervise their agents, the CBN may at any time request for any information or card inspection as it deems necessary. And the financial institution, companies, investment bank, development bank, discount houses, mortgage banks, financial finance companies, microfinance banks, non-interest banks, bank, mortgage banks, payment service banks, mobile money operators, and other non-financial, non-bank finance companies. And these are their key responsibilities. These are their key responsibilities. The financial institution shall have board approval and CBN approval for agency banking. Before they actually initiate agency banking services, there has to be board approval and CBN approval. Number two, develop appropriate agent banking documents, policies, forms, contracts, criteria, super agent criteria, and also be only responsible agent. Whatever the agents do, financial institutions are going to be held liable. They are not going to say that it is the agent that did this. Whatever the agent do, they are going to be held liable as if it was them that did it. Then the next one, maintain effective oversight of the agent's activity. This is very, very important. Assess the adequacy of controls of outsourced activities through regular audits. Formulate, implement policies and procedures, say information, communication. Provide agents with such regulations, manual, and risk management policy documents. Include a risk-based review of critical agent banking processes to ensure that the policies, rules, regulations are adhered to. Be responsible for selecting credible, underline, credible agents with suitable and client outlets. Not the outlet is at the backyard of anybody. Suitable, convenient outlets. Be responsible for the management and mitigation of risk associated with the engagement of agents. Provide basic financial education, which is very, very of agent transaction and activity, and make sure that they adhere to the order and to the rules and regulations of the CBN. The management of agent banking business. Financial institution, how will they manage the banking, the agent banking business? First, develop, implement an agent banking strategy. Establish an effective oversight over banking services. Ensure effective management oversight. Encompasses the review and approval of key aspects of its security control program, their processes, their policies, and their infrastructure. Have a comprehensive process, framework for managing risk associated with reliance on third parties. Ensure the expansion of the scope of the bank's internal audit function to address the increased complexity and risks inherent in agent activities. And of course, there are a series of risks that is associated with agent banking. So this has to be taken into consideration. Take steps to update and modify, where necessary, its existing risk management policies and practices to cover current or planned agent banking services. Take steps to ensure the integration of agent banking applications with the main banking system to achieve integrated risk management approach. Train agents. If you don't train them, don't blame them. So training is very, very important in customer service, confidentiality of information, record keeping, transaction account. Ensure that each agent maintains a record of all transactions at the agent location in line with the extant data retention regulation. So, and there are other permissible activities which we need to note. What are those permissible activities? Cash deposit and withdrawal within If you can hear me, we can continue. Permissible activity, bills payments, fund transfer services, balance inquiry, generation of issuance of mini statements, collection and submission of account opening, and other related documentation, cash disbursement and cash repayment, cash payment, collection of bank mail, correspondence for customers, any other activity as the CBN may from time to time prescribe. And it shall be the responsibility of the financial institution to determine, based on agent risk assessment, which service an agent can provide. Now, let's take particular note of prohibited activities. One, operate or carry out any transaction where there is communication failure. Carry out a transaction where a receipt or acknowledgement cannot be generated. Charge customer fees outside regulated fees regime. Give any guarantee. Offer banking services of its own accord. Continue with agency business when it has a proven criminal record involving fraud and so on. So I think we have actually done with some of these. So let's go to documentary requirements. What are the documents that are basically needed here? So one, board approval, very key. Number two, a document that shall outline the strategy of the financial institution, including current and potential engagements, geographical spread, benefit to be derived, then qualifying criteria for engaging agents. Outreach, does it have strategic location? Two, competence, integrity, and others. Then service level agreement, risk management, internal control, operational procedures, and so on. So this is what is very, very key in the responsibilities of the agents and financial institutions. So we have actually highlighted the key issues that are very, very germane in all those areas. So the next is for us to look at the regulatory framework for agency banking. Regulatory framework. The objective of the learning is to understand the various regulatory bodies responsible for maintaining standards in agency banking. And the learning outcome is to understand the relationship between agents and financial institutions based on regulatory standards, know the regulatory requirement for agents and financial institutions, understand the documentation and approval requirement to become a POS agent. Be aware of the client terms between financial institution and agents. So in this learning outcome, we have actually dealt with the first two. So we go to the understanding the documentation and approval. So we have dealt with all these. So section 4.3, parties to agent banking transaction. The major parties to agent banking transaction include Nigeria bank settlement services system, Nigeria bank settlement system, then the issuer, the acquirer, the agent, and super agent. So those are the parties to agent banking transaction. I think we need to note that the regulatory bodies in agency banking includes Central Bank of Nigeria, then CNF, Shared Agent Network Expansion Facilities, then Enhancing Financial Innovation and Access, then Association of Mobile Money and Bank Agents in Nigeria, then Society for Agent Network Practitioners. So those are the regulatory bodies that are actually saddled with the responsibility to ensure that the operation of agency banking in Nigeria actually goes in a way that can actually bring profit to the operators. So let's look at the scope. The guidelines cover the operations of agent banking as well as the licensing of super agents in Nigeria. The objectives of the guidelines are to provide minimum standards and requirements for agent banking operations, enhance financial inclusion, then provide for agent banking as a delivery channel for offering banking services in a cost-effective manner. So the requirement for application, so let's note this, the requirement for application, applicants shall supply the following information to the CBN in support of the application: name of the applicant, postal email address, business address, telephone number, company registration number. Then other documentary requirements that we mentioned, board approval. Then two, a document that shall outline the strategy of the financial institution, including current and potential engagements, geographical spread, qualifying criteria for engaging agents, service level agreements, risk management, and other requirements that relates to money laundering, internal control, operational procedures, brief description of the agent banking relationship, risk management processes instituted for the agent banking activities, technical requirement for carrying out service under the agent banking relationship, feasibility report, then other documents as may be required. So we look at the structure now. Briefly, let's look at the structure. The responsibility of the selection of agents shall lie solely with FI, subject to the following allowable agent structure. One, super agents. This establish a collection of outlets or franchises within its wide network of outlets. Then sole agents and also sub-agents. Then the information requirement for agent structure is name, physical location, postal address, telephone numbers, terms of engagement, itemizing all requirements. Then also there is the need to also look at renewal of engagement. This is very, very important. I think all of us must actually note this. Licensed institutions shall renew all agents agreement at least biannually, except otherwise approved by the bank. So biannually, the engagement license has to be reviewed. Then also monitoring of agent banking relationship, CBN shall regularly monitor FI agent relationship as well as compliance related issues. Then disclosure of significant share ownership. In case of super agents, the CBN shall require full disclosure of persons or entities that control 10% or more of the capital share or has power to exercise significant influence over the management. So minimum requirement of agent banking contract. One, reference to the financial institution's full liability with respect to customers, and it shall clearly specify the obligations of both the FI and the agent. Two, the principal's responsibility for the onboarding of all agents to its agent banking platform. Three, all activities that the agent shall be enabled to conduct on his behalf or limitations on any such activity in SLA in line with the permissible activities for agent banking. We have listed some of these, but the critical ones here is the seventh, the number 7, that's dispute resolution clauses. So has to be included in the agreement format. Then number 8, explicit statement that agents shall not be allowed to charge any fees directly to customers. The details of remuneration for the agent shall be specified in the contract between the agent and the principal. Then the measures to mitigate risk associated with agent banking service include, at the minimum, limits on customer transaction, cash management, cash security expenses, and so on. So we have listed out some of these. Then the next one is establishment of agent banking relationship. I think we have spoken about a number of issues that relates to that. Particularly the areas of agent relationship and their scope of activities. We have actually spoken about that. So let's go to suitability assessment for an agent. So this is important. Let us look into it. Suitability assessment for an agent. Before the appointment of an agent, financial institution shall ensure that the entity has very viable physical location. Very viable physical location, not being classified as a non-performing borrower in the last 12 months preceding the date of signing the contract. 3, appropriate physical infrastructure and human resources to provide the services required. For purpose of carrying out an assessment under this clause, the proposed agent shall complete an agent assessment form. And prior to the appointment of as an agent under the provision of this regulation, any entity that seeks to be appointed as an agent by a financial institution shall furnish the financial institution with the following information: name of the proposed agent, certificate of incorporation or business name from the Corporate Affairs Commission, description of commercial activities, valid business license or permit for any regulated commercial activities, audited financial statements for the last 2 years where applicable. These are very, very key issues that have been taken for granted. Then tax clearance certificates, and the last one here, physical location, postal address, telephone numbers, and so on. Name TIN as applicable, any other information that may be required. Suitability of prospective agents. In assessing the suitability of an agent, the following shall apply. Financial institution shall assess the moral, business, and professional suitability of the prospective entity, including promoters, directors, partners, and management. At the same suitability ratio actually goes to the one that we have talked about in the past, so we can move forward. The most important thing is that we need to look at any criminal record, fraud or dishonesty, and the track record of the prospective agent has to be looked into. And also, in conducting agent due diligence, there is a need to establish efficient and thorough agent due diligence procedure. Institute clear, well-documented agent due diligence policies and procedures. So all these are very, very important to ensure that the one that is coming in to be an agent will actually goes to get some background information. Indeed, if it is possible, there should be some background checks on those that are coming to transact business of agency. So there's a need to carry out some of this in order to ensure that we are dealing with the right kind of personality. Then framework for licensing super agents, application and approval requirements, minimum requirement has been stated, but this is very, very important. The super agent shall be licensed by CBN, must have company with an existing business at least 12 months. Now look at this C, must have minimum shareholders fund unimpaired by losses of 50 million naira. Must obtain a reference letter from financial institution and must have a minimum of 50 agents under its supervision. So this is very, very important. We have looked at the documentary requirements earlier. Then the responsibility of the super agents to be responsible for developing agent network, to monitor and supervise, to monitor effective compliance system, to take other measures to ensure that the agents operate strictly within the confines of the law. So all these are very, very critical. Then dispute resolution. Financial institution and super agents shall ensure the establishment of effective dispute resolution mechanism. The following shall apply for effective dispute resolution. This is very important. I want us to take note of this. In the event of any transaction failure wherein the funds are in the agents, the period of transaction, super agent shall render the following monthly returns not later than 10th day of the subsequent month. Nature, value, and volume of transaction, incident of fraud, theft, or robbery, nature and number of customer complaints and remedial measures taken, other information on agent operation, any other information that CBN may require. Super agent shall include in its annual report and accounts in the prescribed form all activities of its agent operations. And also, super agent shall be required to submit periodic and other reports as may be required from time to time. Now, what are the powers of CBN over super agents? Request information from super agents, carry out spot or scheduled inspection, direct super agents to take such actions, or desist from taking a particular action, direct the termination of super agency contract, direct the super agents to take such actions against or on behalf of agents as the CBN may find appropriate, direct the super agents to take such remedial actions arising from the conduct of an agent as it may deem fit. Sanctions and penalties. Let us take particular note of this. CBN shall impose sanctions, including but not limited to prohibition from engaging in any further agent banking businesses, prohibition from contracting new agents, revocation of agents banking approval, termination of agents banking contracts with financial penalties. Publication of the list of agents and location is very critical for the super agents to put on their flyers and their corporate information. Relocation, transfer, and closure of agent premises must be disclosed, and financial institution must be informed. So it is the responsibility of the financial institution to ensure the following: no agent shall relocate, transfer, or close its agent banking premises without prior notice to the financial institution, among which we have listed, within 30 days prior to relocation or closure of agent banking premises. The financial institution shall notify the CBN and for the details and reasons for relocation. An agent banking contract shall be terminated where the agent has a proven criminal record of violation of the terms of the regulation. Then the next one is evaluation of agency banking models in different countries. So we have actually looked at some of the countries that have actually done well in these models of agency banking. The Oxford Policy Management was commissioned by Enhancing Financial Innovation and Access to undertake a depth study of agent banking models in 5 countries: Colombia, Brazil, Peru, India, and Kenya. And what we found out was that in all these countries, there are key lessons that have been learned. And particularly, we observed that Kenyan regulators from this program were the importance of involving key stakeholders. They saw the need to involve key holders, including traditional leaders, and also stakeholders from public and private sectors, and in any further development or rollout of the mobile financial services model, and the importance of prioritizing and coordinating national financial inclusion agenda. For example, Brazil has an ongoing strategic financial inclusion project. Also, Colombia has a designated body whose role is to lobby for financial inclusion. So in all this, we discover that this model actually helps to actually bring a lot of citizens into the financial net of the country. The regulatory framework for mobile payment service in Nigeria was issued in 2009, and 11 mobile payment licenses were issued by the CBN in August 2011. And that was followed by a variety of different types of operators coming on stream and opening a range of mobile financial services, which we have seen all over the place. Now, challenges to creating an effective agent banking model in Nigeria were also identified. What are those challenges? Let us take note of this. 1, the relative lack of interest among deposit money banks in taking financial services down market. 2, relatively small number of installed POS machines and lack of interoperability. And 3, know your customer constraints. We want to deal with people, we must know them. If we cannot know them, we cannot flow with them. But in all, it was discovered that this model actually helps and also ensure that a lot of people have been brought into the net of financial inclusivity, which goes a long way. So, and the table showing the different agency banking model in 6 countries that we have mentioned. In Colombia, we see bank-based, not mentioned in regulation, responsibility, bank fully liable for agent actions and responsibility, like we have in our own too, and facilitating agent banking, public institution which lobbies for regulatory change and subsidizes agents, flexible regulation, and so on. The case is not different in Brazil. You have the same outlet. In Peru, bank-based as well. In Kenya, both bank and non-bank based for profit entities only. Prohibited for bank-based model, not mentioned in the regulations for non-bank based model in Kenya. In India, both bank-based and non-bank-based model were used. So the permissible agents activities across different countries. So these are what they are expected to carry out: payments, domestic money transfer, opening bank account, opening account applications. All these countries actually carry out it, except Peru, Kenya, and India, who cannot open a bank account at the spot of a transaction of the business. So in Kenya and India, money transfer is still unclear. But a place like Colombia, domestic money transfer and other transfer actually can take place. But in Kenya and India, there is unclear situation in that particular order. So in summary, this chapter discusses the regulatory framework of agency banking, which includes the assessment of prospective agents, suitability of prospective agents, agent diligence, and the framework for licensing agents and super agents. So all these are the issues that we have discussed in this particular instance. So chapter 5, so we are now looking at management of risk in financial inclusion and agency banking. How do we navigate around risk? The learning outcome here is to understand financial inclusion and its objectives, understand risk management and how it works, understand risk management guidelines on money laundering, then outline different bank agent activities and risks associated with these activities. So we have actually dealt with that. But the most important part here is to look at risk management. How do we manage risk? Managing risk in financial inclusion and agency banking. So financial inclusion has been identified as an enabler for 7 out of the 17 sustainable development goals. So G20 countries committed to advance financial inclusion worldwide and reaffirm its commitment to implement the G20 high-level principle for digital financial inclusion. So the most important thing is, how do we actually navigate around risk management? How do we manage the risk? How do we mitigate the risk? And how do we transfer the risk? So the elements of financial inclusions is embedded in 5 A's. The elements of financial inclusions are actually put together in 5 A's. 1, availability of financial resources. Accessibility, how many people can actually access the financial resources. Affordability, how many people can afford the interest rate and some other rates. And so affordability, people are not aware, they cannot make use of that opportunity. Then adequacy, what kind of fund that is available? Do we have adequate fund that will go around to carry out all this? So these are some of the explanation of the one that we have talked about. So we have talked about financial inclusion, total adult population 18 years and older in Nigeria. We said that, okay, we have about 41% now so far that is totally out of the financial net. So how do we bring them? How do we actually ensure that everyone is involved? Over 60% of Nigerian adult population are now financially included. So financially excluded proportion of the adult population still remains large. So what do we do about financially excluded? We get to this point, we have 36.8% that are still, this figure is 2018, that are totally out of the financial net. So how do we bring them to? Then financial inclusion consumer access strand ranked by population. In South Africa, banked, you have 80%, other formal non-bank 10%, informal 3%, and excluded 7%. You have Namibia excluded 22%, Kenya excluded 17%, Nigeria excluded, largest in the whole of Africa, 37%, Rwanda 11%, Uganda 22%, Burkina Faso 39%, more than Nigeria. Yes, Nigeria 37%, and you have Uganda. Of course, their population is relatively very small. Talking about Burkina Faso, as it were, the population is relatively very small. The population of Burkina Faso is not up to the population of Lagos alone. So Tanzania 28%, and Cameroon, and so on. So financial access by age group. By age group, 18 to 25 years, 30% banked, formal order 9.1%, 18 to 25 years. Informal only 13%, financially excluded among 18 to 25 years, 47%. That's a very large number. 26 to 35 years excluded 31%, 36 to 45 years excluded 30%, 46 to 55 years excluded 32%, and above 56, 41%. Many of them are putting their money under their beds and so on. So it's a real issue. So, but the most important part of this is to look at the risk management mechanism, and we have looked at the objectives of the financial inclusion. Why do we need to have it? So the risk part of it is what we will be working on now. So banking risk management is the process of a bank identifying, evaluating, and taking steps to mitigate the chances of something bad happening from its operational or investment decision. This is especially important in banking, as banks are responsible for creating and managing money or funds or resources of others. So wherever we are reinvesting, wherever that we are actually putting the money, is very, very important for us to see the risk issue there. So the importance of risk management in banking is very high, because some specific reason for the importance of risk in banking sector is to avoid wasting or needlessly losing the money they need to stay in business, avoid disruption to their operations, maintain confidence from investors and customers to continue doing business with them. This is where corporate governance comes in. When banks or financial institutions actually practices corporate governance, there's a structure of checks and balance within. And from there, you can have a stable investors' confidence. Investors will have some sort of confidence that their investment is actually safe, then complies with laws and regulations. So risk management process, let's see how it works. The first one is identification of risk. We need to identify that there is risk. Then we need to assess and analyze the risk. Then we need to mitigate to ensure that we manage the risk, we transfer the risk. Then we need to monitor from time to time. There should be oversight. There should be a means of monitoring. Then there has to be cooperation among the parties that are actually managing the institution. Then reporting is very, very important. So all these are critical issues. So these are the explanation that we have made. So risk management for money laundering, anti-money laundering, and combating AML/CFT requirements. These are the requirements. Customers are identified with at least any of the following: ID, PINs, passwords, payment card, secret code, or secret message while performing any transaction. Agents should report to financial institution within 24 hours all suspicious activities that come to the agent's knowledge. These are the ways to manage all these risks. Agents should conduct banking business strictly within the transaction limit prescribed. So, and also we should look at some of the fulfillment of the requirements. Institutions shall comply with the requirement of the Money Laundering Prohibition Act 2011 and Financing of Terrorism Prohibition Act of 2011. So all these are issues that we need to work on. Okay. So let's look at different types of risk posed by use of agents. One is operational risk. These risks include agent fraud or theft, collecting money and runs away or whatever with the money, unauthorized fees, abusive service of customer by the agent, in particular tying, requiring clients to purchase certain goods and services to obtain other services, misrepresentations, loss of customer assets and records, data entry errors, which is commonplace, poor cash management, agent failure to resolve or forward consumer complaints to the bank. Then there is also technological risk, utility disruption or software or hardware failures, or where criminals actually launched into the acts into the accounts of the financial institution or agents or whatever. Then compliance risk include risk of fines or other civil actions due to agents' non-compliance with laws and regulation. Then there is also credit risk. These are tied primarily to operational risks. The bank may not receive the money owed by the agents. For example, if an agent has a credit line to help manage liquidity challenges due to robbery of the agent or agent theft. For example, in Brazil, some agents do not have any account with the contracting bank. All customer deposits are effected at the time of transfer to the agent, and the agent's bank assumes risk of loss of the deposit until the agent deposits the funds in a bank branch. And to reduce the risk of loss of cash, agents are required by regulator to go to the bank. And there is also reputational risk. Reputational risks are derivatives of the risks noted above: underperformance by agent or agent fraud, robbery, agent liquidity shortfalls, loss of customer record, leakage of confidential customer data, violation of consumer protection, and so on. So all this has to be looked into. Bank management and mitigation of agent-related risks. How do we mitigate? How do we manage this risk? Then agency policies and procedure. Bank agent-related policies and procedures, which are largely shaped by regulatory requirements, typically cover the selection, training, managing, monitoring, and dismissal of agents. And these are the ways by which we can actually manage some of these risk. So by actually knowing who we are dealing with, by exercising strong measures in finding out who are the kind of agent that we are bringing to our space, then due diligence policy to enable assessment of agent financial and infrastructure resources. So all this we have to look into. So a liquidity facility may be provided by the bank or a third party. Agent may also need assistance with cash management if they engage in significant cash in and cash out activities. So these are some of the means by which all these risks can actually be managed. Then monitoring is very, very key. Monitoring agent activities enables a bank to ensure that agents are performing bank services adequately. A bank will also monitor agent use and maintenance of the equipment and systems that are typically provided to the agents, including systems to ensure information security and enabling IT platform. So all this has to be looked into. Follow-up measures is very, very important. Visitation to all the spaces of the agent. Then other risk management techniques, periodic review of agent network, very important. This will include temporary suspension of services, reduction in transaction limit, termination of the agency agreement, and so on. Then internal control, audit and regulatory reporting is very key in managing of risk. Bank's internal control function should cover agent operations. It should be extended to the operations of the agents. It is advisable that there should be a bank manager or high-level executive officer who should be responsible for agent operations. So this is very, very important. Then contingency planning. Contingency planning in the case of any significant disruption, discontinuity, or unplanned or uncontrolled event affecting the bank's agent business needs to address the potential failure of or cyber attacks on the system or technology, backing agent operators, and natural disaster damaging agents or other facilities. You remember when we had COVID, it was very, very turbulent, and things have to be managed for the purpose of business continuity. Then insurance coverage is part of risk management by transferring the risk to ensuring that there is business continuity. Agent activity and consequent bank risk. What are those activities? Account information, e.g. balance inquiry, providing client with bank statement. Operational, agent error can take place. These are the risks. Then legal, violation of privacy, consumer protection rules. Reputational, minor resulting from operational risk. So operational, legal, reputational, and other risks are very, very critical in this area. Receiving of loan, analyzing credit, loan disbursement and collection, sales of micro insurance, data processing, cash in, cash out. So all these has to be basically work on holding and on individual customer payment and receipt, bill payment, processing loan application, processing government benefit and other benefits to customers. So all this has to be looked into. And also we need to look at the reputational damage that this may bring. If all this happens, what is going to be the lot of the financial institution in managing some of these risks? Then there is a need also for consumer protection. So financial institutions shall establish a appropriate consumer protection mechanism to protect its customer, because we are in an era of customer centrism, and we must do everything possible to protect our customers from fraud, from data privacy breaches, and other general losses. So all these are critical. So the following minimum requirements shall be complied with at all times. The financial institution should establish mechanisms that will enable their customers to and users to identify their agents, provide their agent with necessary tools that will enable generation of durable receipts, provide channels of communication, provide dedicated customer care telephone numbers. This is very, very important, but it is a third order. When you are calling customer service, you are going to be thrown to everywhere, and it is mostly ends up in frustration. So this we have to look into it. Establish complaint redress mechanism. Ensure that all customer complaints in respect of its agent banking operations are resolved within 14 days. Keep record of all customer complaints. Ensure that the customer are made aware of the fact that they shall not carelessly store PIN and other critical information in their phones or share such information with other parties, including the agents. Establish contact centers. Establish dispute resolution. Issue receipt. Provide acknowledgement of all documents. have signs that are clearly visible to the public, indicating that it's a provider of service of the financial institution. And this issue of PIN itself is very, very important. You have a situation where you have a report that at the POS center, somebody copied the PIN of another person and so on. And eventually it resulted into fraud and so on. So disclosure at agent location, we've talked about that. Then branding and advertisement. Let us take note of this, branding and advertisement. So financial institutions that provide agent banking service shall be required to comply with the following. Financial institutions may choose to brand their agent banking service under their brand name, use of protected word like bank, finance, financial institution, financial intermediary, or their derivatives, or any other word suggesting that the agent is itself a financial institution is prohibited. In advertising, therefore, its agent banking service, the financial institution shall not in any form misrepresent the agent as a financial institution or mislead the public as to the services available at the agent premises. An agent shall not brand its premises in a manner that may suggest that it's a financial institution. An agent shall display its principal's name and logo in a conspicuous manner and ensure that where there are more than one principal, the names and logos shall be similarly displayed. And we've talked about submission of statutory returns. Then we've talked about the power of CBN and their sanctions. So we now go to the references. These are some of the places where some of this information are actually being extracted. So these are the areas that we need to do. So the test question and answer is the next that we want to the test question and answer, at least for people to be able to look at it. Agency banking is also referred to as branchless banking, true or false. So we need to just get ourselves acquainted with some of these true or false. According to Business Day publication 2021, which of these countries was not referenced as an inspiration for Nigeria to adopt agency banking? China, Peru, Brazil, Kenya, Colombia. Of course, we see the answer is A. Which of the following is the result of higher rate of financial exclusion? An increase in patronage of brick and mortar branches, growth in the country's economic activities. I guess everyone will have some of these question and answer to work on our own and to ensure that we get appropriate answer so that we can prepare ourselves. So let me read out some of the question. An agent banking is the provision of banking services by an agent consistent with the aim of broadening the access point for delivery of specified banking services and thereby facilitating wider access to the banking services, true or false. So we will answer some of this on our own. It's just for us to get acquainted with some of the way the question will be asked. What is the agency banking and what service can be provided through agency banking? List and explain the benefits which we have actually worked on. So the answer, like with the answers to all the questions are also given so that we can also work on that and work on that on our own. So the answer and the question to number 2 also is given. These are the answers to the chapter 2. And every of the chapters also has their question, has their own answers that we can actually work on our own. So all that we need to do is to get acquainted with the answer, the way the question are being set, and from there we'll be able to practice it on our own and we bring out what is right answer to all the questions that are being asked. All right. So I think we have come to the end of the review session. So the next is for the coordinator to see if there are questions for us to be able to look at before we call it a day. So thank you very much. I appreciate all of us for being around this evening. Thank you so much. Okay.
Thank you very much, sir. Thank you for your time and for
Thank
the
you so
great
much.
lecture, sir. We really learned a lot, sir.
So much.
So, based on time, please, if you have any
Thank you
question,
so
please
much.
just raise your hands, your Zoom hand, please. So, doctor can answer any question, please. If you have any question, please raise up your electronic hand. So, I'll call your name to make it orderly. If you can raise up your hand, you can just type the question in the chat box. So, I will read out on your behalf. So, any of the two. So, any question, please.
You can write it out. If there's any question, you can write it out.
Okay, Mr. Joseph, ask your question, please.
Okay, good afternoon. I appreciate the lecture and the
Good afternoon,
review.
sir.
I really appreciate you, Doc. He did justice to a very great one. So my question is that the certified level still remain OBJ all throughout as multiple choice, or
Yeah,
right?
it's all OBJ, same as you started. I've answered that, doctor. So it's OBJ, no theory or this is objective and multiple choice question. True or false, way the questions are in the study pack. True or false and options.
It's all right. I appreciate, but I really love the processes.
Alright. So anyone with any other question for doctor can take his leave. Doctor, I don't think anyone has any question. But if anyone send me a personal question, I'll send to you, sir. Yeah, your WhatsApp, sir.
Okay, no problem. No problem. Welcome.
Thank you very
Yes,
much, sir.
thank you so much.
Yes, sir.
Most grateful for your time. I appreciate being with you this evening.
I really appreciate you
Thank
more,
you
sir.
very much. Thank you so much.
Thank you very much, sir.
Thank you.
Yes, sir.
So have a great day.
You too, sir.
Thank you so much. I appreciate you.
Yes, sir.
You're welcome.
To every candidate, I would like to first apologize for this time. I know previously we've always been doing morning or afternoon, like 10 to 11:30, 12, then 1 to 3. It's based on the facilitators, they are very busy with the entire schedule, and it won't be right if we don't do tutorial for this last level. So the other tutorial session will be ready by 6:30. I just want to plead with us to just please attend the other lecture by 6:30. Just 90 minutes also, 1 hour 30 minutes. And then the third subject will be tomorrow afternoon after church by 1 p.m. Same 90 minutes also. So I would like to say thank you for your time, for dedication and commitment. So please do have a nice break. So 6:30, you can join using the same link again. Thank you very much.
Thank you, Mr.
Thank you, sir.
Israel.
Thank you so much. Sir. Really appreciate.